Well, what's up guys, Mike the Investor, and in this video we're going to be looking at my full dividend portfolio. I made a couple additional purchases this week. I added 5 additional shares to Bank of America and 5 additional shares to Altria as well. And also when I added those shares, it also increased my total annual dividend income by $20.60. So a pretty nice increase in my total dividend income. And after we finish looking at the portfolio, we're going to jump on the laptop so that way we can see how the new metrics looks on the dividend tracker. So if this is your first time hanging out, be sure to go ahead and smash that like button for the algorithm, and also be sure to click that subscribe button as well, and let's go ahead and check it out. Alright, welcome back to the channel. Let's go ahead and pull up the Robinhood app so that way we can check out my full dividend portfolio. So as we can see here, the portfolio value is $8,936.39. During market hours, I was up 0.15%, and after hours, I was up 0.16%. You can see for my buying power, it is $3.03. And now as we look at the 1 week, we can see I am up just 1.01%, and that is $88.97. As we look at the 1 month, I'm currently up 0.84%, and that is $74.82. And as we look at the 3 month, I'm currently up 8.98%, and that is $736.24. And for the 1 year, I'm currently down 0.71%. That is $64.33. And for my all-time, I am currently up at 0.18%, and that is $16.02. So that is how my portfolio had been performing. Let's go ahead and check out each individual holding. I only have 15 holdings in this portfolio. They are all individual companies. I do not hold any ETFs, also known as exchange traded funds, in this portfolio. So as we scroll down, we're going to see the first position in my portfolio is Microsoft. This is also my largest position as well. So as we go into my position and scroll down, you'll be able to see I have a total of 5 shares. My market value is $1,015.90. My average cost $171.87, and you can see for my portfolio diversity, it is 11.37%. So it's almost 12% of my total portfolio allocation. And as we look at my total return, I'm currently up 18.22%, and that is equivalent to $156.55. Now, Microsoft needs no introduction, one of the largest tech companies in the world and one of the largest companies in the United States, also with over $1 trillion market cap. So the next position in the portfolio is going to be IBM, and this is the second large tech stock in my portfolio. IBM is also known as International Business Machines. They also have over 20 years of dividend growth as well, and I think they still have a lot of potential growth in my opinion. So as we scroll down, we're going to look at the total position. I have a total of 5 shares. The market value $627. My average cost $119.96, and you can see it's just 7% of my portfolio allocation. I'm currently up at 4.60%, and that is $27.60. And IBM is also the newest addition here in the portfolio. So after looking at this position, we move over to Johnson & Johnson, a dividend king in the healthcare sector. This is also one of the largest healthcare companies in the world also. So as we scroll down, I have a total of 4 shares. My average cost $139.70. My market value is about $600, and I'm currently up at 6.87%, which is $38.38. Now, I've been waiting on Johnson & Johnson to drop a little bit lower to my average cost. I would like it to be even lower than my average cost before I buy any additional shares in this position. Now, this is one of my major core positions, so I am waiting for any type of pullback to add more shares into Johnson & Johnson. So the next position is going to be Procter & Gamble. This is also a dividend king in the consumer staple sector. They have over 63 years of dividend growth. If I'm correct, I believe they have 64 years of continual dividend growth, which is extremely rare to see. So as we scroll down here, we can see I had 3 shares. The average cost $110.29. I'm currently up at 13.91%, and that is $46.03. Now, I only have 3 shares of Procter & Gamble, and I missed my time to buy more into Procter & Gamble back in March when we had our market crash. Now, that's the only reason why I haven't bought any more into Procter & Gamble, because when the stock drops, it does not stay there very long. So you definitely, if you're holding this company, you want to try to add more to your position. So if we just scroll up a little bit, I'm going to hit the 1 year tab. And if you go over here, we're going to see in March, this would have been the best time, March 23rd, 2020. This would have been the best time recently to buy more shares in Procter & Gamble. You can see $97.70. So that's well under, my average cost. And I would love to buy more into Procter & Gamble. I kind of missed my turn, but I was also buying, more into other positions as well, such as Microsoft. So after we look at Procter & Gamble, we go over to Starbucks. Now, I am down a little bit on this position, and this is also one of my larger positions as well. So as we scroll down, I have a total of 12 shares. The market value, $892. My average cost is $85.32. And it's about 10% of my portfolio, and I'm currently down at 12.85%, and that is equivalent to $131.61. So I am down a little bit on this position, but I still believe Starbucks is going to be one of those companies that's going to still be able to innovate themselves and still be here when the smoke clears. The next position is going to be Disney. They need no interruption, and they're one of the one out of the 2 companies that are currently have a suspended dividend in my portfolio. So as we move on down, I have 6 shares. The market value a little over $700. My average cost $117.68, and as you can see for my total return, I am just up at 0.87%, and that is $6.11. So after Disney, we move over to 3M. This is also a dividend king in the industrial sector, a very large company. As we move down, 4 shares, my market value is $639. The average cost, $159.60, so it's pretty much even with the price 3M is currently at now. And as you look at my total return, I am just up at 0.13%, and that is equivalent to 84 cents. So as we move over to Coca-Cola, this is also a dividend king in the consumer staple sector, and they are in the soft beverage industry, and are also in some other industries as well. So as we move on down, I have a total of 15 shares. The market value is over $700. My average cost, $47.90. And you can see I'm currently down at 2.09%, and that is equivalent to $14.99. After looking at Coca-Cola, we look at Pfizer here, and this is a very large healthcare company in the entire world. Also, as we move on down, I have 15 shares with them. My market value, $546. My average cost, $37.39. And for my total return, I'm currently down at 2.65%, and that is $14.84. So after looking at Pfizer, we move over to Altria, and this is the first company that I added additional shares to this week. So as we get ready to scroll down, you can see I have a total of 15 shares. The market value, $623. The average cost, $45.57. So I'm still down a little bit on this position. And you can see my total return is 8.85% that I'm down on, which is $60.51. So as we scroll on down, I want to show you the purchase of Altria. So as you can see here, July 16th, $207.34 is what I purchased into this company, and that gave me a total of 5 shares at a limit price of $41.47. Now I just wanted to be, completely transparent with all of these so you can see what I purchased at, and just so you can kind of see some of the behind the scenes as well. So after looking at Altria, we're going to move over to Bank of America, which is the second position I added additional shares to in the portfolio. And this is the second largest bank in the United States after JP Morgan Chase. As we scroll down and look at the position, I have a total of 15 shares. The market value is just $348. My average cost, $27.01, and I'm currently down 14% even, and that is $56.72. Now, Bank of America, and I have one other position, they are my smallest positions in the portfolio that are under about 4% of portfolio allocation. So after Bank of America, we move over to Realty Income. Now they need no introduction. They're also known as the monthly dividend company. As we scroll on down, you can see for the position, I have 10 shares, market value $585. My average cost $72.14, so I did purchase a little bit high on this position, and I'm currently down at 18.79%, and that is $135.52. So I am down a little bit on this position, but the real estate industry has been suffering. And if you think about it, there are so many people, that are out of jobs currently that cannot afford to pay, their mortgage, their rent. You got companies that are, foreclosing on loans because they can't afford, their rent or their leases. So there are so many things that are affecting, the real estate industry that we're definitely going to see the impact on stock prices. So as we look at the next position, it's going to be Stag Industrial, and these are the last positions here in the portfolio. I have a total of 4 REITs, and Stag Industrial is the second REIT in the portfolio. So as we move on down, they have been actually pretty stable as well. I have 10 shares. The market value is just a little over $300. My average cost $29.88, and I'm just up at 1.02%. and that is only $3.05. So the next position will be Innovative Industrial Properties. Now this REIT has been on a tear. This is in the real estate industry, but they also invest in, the cannabis industry as well by investing in facilities, that cannabis growers are gonna use, which I think is a pretty cool REIT in my opinion. So as we scroll on down, I have 5 shares. The market value is $471. My average cost $74.49. I'm currently up at 26.50%, and that is $98.69. So a not bad return on IIPR. And as we move over to the last position in the portfolio, Apple Hospitality REIT. This is also the second and only position in the portfolio that has stopped paying their dividends. So I have 13 out of the 15 companies that are still paying me, a dividend every quarter or every month based off of their frequency of when they pay their dividend. So as we move on down, I have my position. I have a total of 55 shares. My market value $492. My average cost $14.12, and I'm currently down the most on this position at 36.62%, and that is $284.37. Now the reason why I'm still holding on to Apple Hospitality REIT is because I still believe they are a strong REIT, even though they are suffering a lot because they are in the lodging side of the real estate industry. But I believe they are a strong company, and I'm just gonna keep holding on to them and hoping they resume on paying that dividend. Now, if any type of red flags come up that are extremely detrimental to the company, then I will probably go ahead and cut my ties with them, just because I'm not receiving that dividend anymore. But I'm still trying to hold on to them and hoping they rally back and start resuming that dividend. So those are all 15 positions in my portfolio. We're gonna go back out of Apple Hospitality REIT, and we see the watch list here, and we're just gonna scroll back up so that way you guys can see each and every single position that I hold. And as you can see again, for the portfolio value, $8,936.39. Let's go ahead and jump on the laptop briefly so you can see my dividend yield and how much my total portfolio produces in dividend income. Let's check it out. All right, investors, so now we are on the dividend tracker, and the portfolio value is a little bit off because this only updates once per day. If you are using this dividend tracker, you already know that it only updates once per day. And if you do want to check out this dividend tracker, go ahead and check out the links in the description. There's a free dividend tracker, and there's also a premium version to this as well. I will have that placed in the card so you can check that video out also. So as you can see, the dividend yield 3.3%. Now to make this pretty easy, for every $10,000 in the portfolio, I will pretty much be bringing $330 in annual dividend income. So that's kind of how that works in a nutshell to make it pretty easy. Now, of course, I don't have $10,000 in the portfolio just yet. And as you can see, for the yield on cost, 3.18%. And my total annual income is almost at $300 already
for my annual income at $294. So that's not bad. I do want to raise my dividend yield to about 4.5% to 5%, kind of see where things go. And just to make things easy again, so say for example, I have $10,000 in my portfolio. If I have a 4% dividend yield, that will pay me $400 every year. A 5% dividend yield, that's $500 that you'll be getting paid every single year. So even if you went to 6 or 7% on 10,000, that is giving you either $600 or $700 in annual dividend income. So that's kind of a easy way to kind of see what your portfolio will be producing based off of your dividend yield. And as we scroll down a little bit, of course, Apple Hospitality REIT is the largest position that I'm currently down on. And then we have Bank of America. Now, as we scroll down, I want to show you the position that gives me the most dividend income out of the year. And that's going to be Altria, just on my 15 shares. You can see they are paying me $50.40 a year just on 15 shares. They have a really nice dividend yield. As you can see, I believe it's 8.06%. Yes, their dividend yield is 8.06%. And this next column here is going to give me the yield on cost at 7.37%. So if we go over to the next button here, it's going to give you the last 5 positions in the portfolio. Realty Income, we have Pfizer, Procter & Gamble, Starbucks, and Stag Industrial. And as you can see, most of all of my safety scores are in the green, or they are in the high yellow. Now I do have Innovative Industrial Properties that's completely in the red with a 9, but they also have still been paying their quarterly dividend as well. I just got paid this month actually from Innovative Industrial Properties. So that is, the dividend tracker kind of in a nutshell, just the free version. There is a premium version to this as well. I'm not going to go into that in this video, but I do have a video that I break that down. I have that placed in the card, so that way you can check that out after this video ends.
All right, investors, so that is my full dividend portfolio update for the week. Be sure to let me know down in the comment section, and also smash that like button for me for the algorithm. It really helps out the channel. And if you're still watching this video, I do want to kind of plug my merchandise real fast. If you've noticed, I've been wearing shirts like this. Invest or Lose is a brand and a movement that I personally created. And the meaning behind Invest or Lose is if you're not investing in yourself, then you're losing. And the reason why I designed this brand and movement is because investing in yourself comes in many forms in life. It doesn't just come in financial. It comes in fitness, health, building relationships, acquiring new skills, education. There's so many things that we do that can help us achieve the things that we want in life. So that's why it's not just a brand, but this is a movement. Investing in yourself is a lifestyle that you do every day to acquire those dreams and goals that you want in life. So that's the whole reason why I created the brand Invest or Lose. Let me know down in the comment section, what you think about that. But that's my thought process, and that's what I live by. So if you do want to support the channel, or you like the merch as well, I am giving 10% to the end of July on all of my merch. So be sure to check it out. I will have the link in the description, and I will also have it pinned in the comment section for you as well. I'm Mike the Investor. Remember to stay inspired, stay motivated, invest in yourself, and I will see you guys back next time.